Thanks for being here today, Rob.
Mike, it's my pleasure, and thanks for having me.
What do you believe are some of the major misconceptions about the program among borrowers that have utilized the program?
Mike, thanks. It's a great question. And I think one of the things that people have struggled with in the lending community is getting funds deployed and making the funds available. The application process has been painful in some cases. But if you think about it, 35 days ago or whatever, a couple months ago, there was no PPP program. So the programs come from scratch all the way through to now having funds deployed. And to think that trillions of dollars have been deployed in 60 days from scratch is tremendous. You know, and certain lenders, certain banks have been better at handling the applications and the process than others. And some have made it a chance and an opportunity for new businesses, where we've had clients who have stalled in the process only to find new opportunities in lenders, smaller lenders and regional banks that have been able to put through the program, get the loans in place, and take advantage of new relationships to grow their portfolio.
Now that they've taken on these clients, do you believe that many of the borrowers may stick with those lenders if they weren't able to be with their original lender because of this?
I can tell you that is unequivocal and absolutely true. Where I have over the last month or so been involved in no less than 500 calls with lenders and clients, all sizes. And for those lenders, in one case, there was a money center bank that was their long relationship. They'd been with that bank for a decade. The process got bogged down. They went to a local lender who put forth the PPP, helped them, got the funds approved in a week or two, was 1.3 million, and they've already said they're going to move some, if not all, of their business because of the new relationship and the touch points, rather than saying it's in our system somewhere. I also think too, you know, certain banks were geared up in order to handle it. Some from the beginning saw it as a new opportunity. Atlantic Union Bank out of Maryland was one where they saw it as an opportunity to develop new relationships and saw it as an opportunity to grow. It's finding those more regional banks that were prepared to do that.
Now, accounting for the usage of the funds from the PPP loans is required to be reported by the borrower. Can you explain a little bit about some of the reporting that is required by the borrower?
I can, and that's going to be critical. You know, the early stages were, let's get the applications in so we can get the funds. And now we're at the point where a lot are looking to account for them. And the frequently asked questions by the SBA, and particularly there are 46 of them that have come out. And number 31 says you have to show a significant need, or if you don't have a need, you're signing and taking the money under penalty of perjury.
So that's a significant consequence, the penalty of perjury. And does that penalty of perjury include potentially jail time?
Yes, but people who have applied, were successful in getting, now when they look at FAQ 31, there are significant differences about adherence to the need factor. And what I've said to multiple clients, I said that if if everybody who took a loan received monies over $2 million will be audited according to the SBA. And I said, if you come up snake eyes, that the penalties that they had on the college admission scandals will look like a slap on the wrist compared to what's going to happen in this case.
They need to be able to show that the funds were utilized in a certain manner. What are those funds able to be used for, and how should they go about best positioning themselves to prove that they use the funds in the proper manner?
So it's a great question. So 75% of the total dollars received have to be used for payroll and payroll-related items. And you have to be over that threshold. The other 25% is for rent, utilities, interest, not principal payments, but interest payments. And if the payroll, and that includes, health insurance, et cetera, if that threshold is under 75%, then you're open to having the whole loan clawed back. It's not just, it's an all or nothing generally. And what we've told clients is really, although it might be a hassle to set up a separate bank account for PPP disbursements, so it's easy to track them.
Are there additional penalties that can be assessed as well on top of that?
Well, they're potentially they're financial, there's interest, and there's also criminal liability. So, there's significant both civil and criminal. And I think, again, if you think about the premise of the program, is that the SBA is a lender where you've exhausted all your other avenues. So to me, that's the real condition, or FAQ 31, is to make sure that you've exhausted your other avenues. And in fact, if you look at Shake Shack, if you look at Ruth Chris's, if you look at Harvard University, where they were all received multiple millions of dollars and ultimately decided under pressure to give it back.
To what degree should the lenders, the non-PPP lenders, be reviewing their customers' ability to prove eligibility for the loan? Meaning that should the non-PPP lender that has a relationship with the borrower be closely watching how that borrower is reporting and using those funds today, so that they don't put themselves at risk and ultimately hurt the non-PPP lender in the relationship?
I think it's an interesting question. It's about the communication, right? The PPP funds are for a specific purpose, and in some of the relationships we have, where the current relationship team couldn't come in and couldn't execute on the PPP, we've provided them updates about receiving the funds, when it's going to be used for, and lenders have asked for, and rightfully so, updated projections so that they can track their proceeds or their loans versus the non or the PPP loans as well.
Okay. Now, we've gone through a few different stimulus packages. Do you believe that the federal government is likely going to need to provide another round of funding of some sort for small businesses going forward as we get into potentially a deeper recession?
It's a great question, and I'm probably not going to answer it because I don't have my crystal ball, but the best thought or comment I heard about that is where somebody said, right, that the PPP is designed for the next 8 weeks or through June 30th, right? So then what happens over the summer? For instance, if you're a hotel or where you're ramping up your business, you're not totally up to full employment or full occupancy, and there's another round. It's hard to say that all of a sudden that you've provided this much and to all of a sudden it's going to stop. You know, it just senses that there may be a need for more, and then, you know, if you don't provide it, if the government or doesn't provide it, then does it set back all that they've tried to do to date?
Okay, well, that wraps up my questions, Rob, about this. You provided some tremendous insights, and I do hope that you and your family are staying safe through this environment, and that we have an opportunity to speak again. But thanks again for being here for all of our viewers today.
Michael and I'll wish everybody lots of health through it. And one final note, into those that came up particularly big for some of my clients, a big shout out to Tom Ennis at Atlantic Union Bank and to Mark Buren of CIBC. Difference makers in every way. Mike, thanks for having me.
Pleasure's ours, Rob. Thanks and have a good day.